We did a Skynet experiment and asked ChatGPT if a computer controlled the world, what currency would it use? And it actually came back and said,
Boom shakalaka, what's up everybody? Today's episode, I am joined by fan favorite Bill Noble. He's going to be sharing us exactly what's going on in these crazy markets. Make sure to check out the interview and also follow him on YouTube, link down in the description. Bill, welcome to the channel. Welcome back, fan favorite. How you doing?
I'm good, sir. Thanks for having me.
Yeah, it's an absolute pleasure. So, interesting times in the markets, huh?
Oh, God. All right, so let's review. Let's go back to January when crypto Twitter was, I don't know, acting like fans at the Roman Colosseum, going like this for CZ and crypto as a whole, praying for an execution. That was the buy signal, like, of all time. All right. And then, of course, it goes up all month as everyone thinks it's a suckers rally. And then the AI coins, 100x or 50x. And then everybody says the bull market is back. And then what really happened was regulators were back. And here we are. So this is really going to be about how to trade what I hope is a bull market, because I've seen this before back in 2009, but we can kind of go through all that throughout the show.
Okay. Yeah, very, very interesting. Quick change of things over the past few days. It seems I follow a lot the Bitcoin Fear and Greed Index, and it's almost like when people are most fearful, that's when the market takes off, and then when they get greedy, boom, just get smacked.
Right. Regulators showed up, and this is very much like 2009. So to review, in 2008, there was a huge financial crisis. Investment banks across the board and insurance company made bad investments that went to zero and made the companies insolvent. Sound familiar? Kind of like FTX and all those guys, right? So that was crypto's 2008. Then once the market bottomed, the first stuff that rallied was, kind of like low cap speculative stuff, like Solana came to mind. Like at $9, Solana was dead. And that was one of the first coins out of the gate in January.
Dude, you were talking about that the last time you were on here, and then days later it blew up.
Yeah. I mean, so low quality stuff comes out of the gate first, then higher quality stuff followed. So, you got the 40% rally in Bitcoin. And of course, at that point, everybody was dying to get Bitcoin below 20K, when the reality was it was below 20K for 6 months. You had 6 months to do it. Everybody kind of went to sleep on the market, which, that's how markets twist people up. Then it rockets higher. And then any attempt to buy a dip, and this is key. First, there was no dip, which messed people up, because bull markets mess people up too, right? So first there was no dip. Then there was a dip before the FOMC. So you had to be brave enough to buy it in front of the Fed. Then, of course, recently it was going up forever with the AI trade, which I got a few things to say about that. And then, of course, regulators come in, and now it all looks like it's going back to zero. And I call that the knife experience, where everybody goes, oh my God, it's a repeat of the bear market. And, chart levels get broken. And, as a technical analyst, I have to respect that. But frequently when you get these dips, in bull markets, they create a lot of fear, stops get run. And one of the questions you have to ask yourself is, okay, if you did a bad trade, you bought the top, you have that in common with every trader that's ever lived, including the great ones. So if you did a bad trade, you did a bad trade. But if you're kind of an investor type and you freak out and puke out your crypto after a regulatory booga, 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 we're coming to get you like Kraken, right? Who are you selling your crypto to? Probably smart money. That's a guess.
Yeah. So Willy Woo posted this chart last week, I think it was, and it was showing large Bitcoin buyers only Monday through Friday, nothing over the weekend. Heat signal of institutional buyers going on. Very, very interesting. And, this, it seems like the market fluctuations have been coinciding with the most feared recession on earth. Like for the
Right.
past month, no one recession's over, nothing about it. And then all of a sudden today, headlines again, recession is back. All these charts that I saw today, recession is back. And it's like, okay, like 2000, nobody knew about the recession. 2007, 2008, nobody knew about that recession. This recession, everybody's known about it since 2008, especially the past few years since COVID. Everybody knows the recession's coming. So, what's going to happen with that?
Okay. Great question. So you're right. In 2007 and 2008, I mean, in 2007, we knew there was a problem in the banking system, or at least the bank I worked for did. Okay. We had no idea the impact that crisis was going to have on the stock market, which of course, the economy sort of followed the stock market, as that calamity unfolded. Now, in this case, everyone is predicting a recession. Everybody is bearish. I mean, the statistics are unbelievable. So you are right. Institutions are loading up on Bitcoin. So, dips will be limited. Okay. Alternative currencies are back. Now, the recession, nobody gets a recession when they expect it. So if they expect a recession, yeah, you can expect some indigestion in February and March, but you can expect a summer rally. And then a recession comes off a shock. Now, my theory, crystal ball-ish, is that if there's a recession, it's going to be off a geopolitical shock, right? A tactical nuke in Ukraine, possibly a weather shock. Everybody was blowing me off when I was talking about that earlier in the year on my channel. And, you got this earthquake in Turkey and these tragic events. So recessions can come off black swans. Now, that said, let's look at the economic picture and what's really happening. The recession is in white collar employment, right? In other words, these tech companies, can't grow revenue anymore. So they're just, everybody's cutting 10% of headcount just because they can, just because they woke up one day and said, let's get lean and mean. We're afraid of a recession, and, they're creating what they're afraid of. So that's going to cause a correction in housing prices. AI is going to come around. That's going to make existing employees more efficient, eliminate the need for certain jobs. And as sad as that is, think about it. Corporations get leaner and meaner, right? The Fed eventually has to wake up to the fact, especially with continuing unemployment claims, that, the labor market is kind of, and going hawk-tard is going to make it worse. And that's a whole other narrative. But if you have leaner and meaner, AI increasing productivity, okay, that could be constructive for stocks and constructive for crypto in like the summertime, right? Because, everybody thought when the internet came along, oh my God, the internet's here. Oh my God, the PC's here. Oh, it's, I remember when Word came out, like, oh my God, everybody who uses a typewriter is out of a job. It's the end of the world. Like, everyone's looking at AI from a negative standpoint, and they need to look at it from a positive standpoint. So nobody gets a recession when they expect it. Okay. You only get it after everyone goes, oh, the equity market or crypto's up. Thank God there's no recession.
Absolutely. So you mentioned you were talking about this on your channel. How do people find you, Bill?
All right. Well, I have my own YouTube channel now, Crypto Noble, or YouTube's got a new handle-based system. So at Crypto Noble on YouTube. Appreciate anybody who wants to come over there and give me some love. Market update Monday through Friday, 3 shorts a day. Going to do long-term price predictions soon. So, any love I can get, I would appreciate.
Awesome. I'll also post links down in the description for anybody who wants to there. So you're talking about AI. AI coins exploded. With ChatGPT, everybody went bonkers about AI. Now, me personally, I'm kind of like a specific use case AI thing. Like, we've shown it can do one AI platform can do one very specific thing, which it's good at. But what's your take on AI coins and the whole AI I guess trend?
Okay. So I think to understand AI, you need to get a book by Kai-Fu Lee. All right. I read it 3 years ago about, what AI can do. He gives you like 200 pages of, you know, scary AI stuff and then ends it with it betters humanity at the end. So get the book.
Mm.
I think AI increases productivity. I mean, I know like in my little operation, in my little world, Chat GPT is saving us, from a person we couldn't hire, right? It's turning one person into two. Now, let's talk about AI coins. Oh, God. Talk about unpopularity, right? So first, I'm bullish Bitcoin, unpopular. Then I'm like, hey, AI coins, be careful. Here's why. When you have AI, you have to have tons of data. So the machine will learn from the data. The mystery of AI is that nobody really understands how the machine learns or, what its brain looks like when it has learned, but you got to have tons of data. So, the stuff that's been around for a while, okay, maybe they have tons of data, right? But when somebody calls into a show and goes, oh my God, I need the next 100x AI coin. Whoa, right? You don't just flip a switch and go to AI. I think this AI narrative is almost like what blockchain was in 2017. I mean, if you weren't saying, hi, I'm Bill Noble and I'm into AI, no one wanted to talk to you, so be careful with AI FOMO.
Yeah. Well, I mean, it's like the next iteration. There's always a craze. It was DeFi, and then it was dog meme coins, and then deflationary stuff. So now is the AI, and you just don't want to get caught on the wrong side of it.
Right. You don't want to be caught on the wrong side of it. And one of the things that I tried to tell people is I think the AI coins at this point are like a high volatility trading play. Right. You can invest. I mean, hey, if you get a dip, I tell people when it's up 25%, sell. When it's down 25%, you can take a shot. And who knows, you get lucky if something really takes off. But I think it's a trading play. Now, what I also tried to tell people is that, if you're buying AI now, or you feel like you've missed out on AI, again, be careful, because just like I said, if you sell your Ethereum now, who are you selling it to? Now I'm saying if you buy some AI related thing, who are you buying it from? Most likely somebody who was investing in AI like 2 or 3 years ago when nobody cared. Right. So always be mindful on who's on the other side of the trade. Okay. So, AI coins may not be as good as you think. They may be good trading plays. And then on the other side, the introduction of AI doesn't necessarily means Skynet from the Terminator and, it becomes self-aware, and if you remember that movie, it didn't turn out well for humanity, right? There's euphoria and disaster going on at the same time. And I would discourage you from traveling to those extremes.
Yeah, it was funny when I watched Terminator back in the day, I thought the same thing, that it was going to be these giant robots. Little did I know it would be a little handheld smartphone that everybody turns into a freaking zombie looking at, It just ate our brains.
Yeah, I mean, we did a Skynet experiment and asked ChatGPT if a computer controlled the world, what currency would it use? And it actually came back and said it would likely use a computer-friendly currency like Bitcoin or Ethereum. Actually said that. And then it also said that it might actually invent a new form of money, which goes back to kind of a bear market transitional philosophy, which is that the next new thing maybe hasn't been invented yet. And then, of course, it was really unusual. I posted that to Twitter. Because, man, I thought I was really smart. Wow, I got GPT to say something positive about crypto. Lost 10 followers. Tried to put it up on IG, and IG showed it to 2 people.
All right.
So people, companies, Web 2, they are really touchy about this stuff. Now, if you do want to talk, what this might do, you got to ask yourself about the number of employees at Google, right? In other words, Google may use the fact that, they are perceived as being behind on AI as an excuse to open up the door. I mean, they got ChatGPT said they got 130,000 employees. I've heard numbers as high as 175. I mean, if they do a 20% reduction, right? They use all of this, like say the next Fed rate hike, because that's what companies have been doing. They've been using the Fed rate hikes as cover to do the layoffs, saying, oh, well, it's the Fed.
Yeah.
So if Google opens the door and ups the ante on everybody with the layoff, that's going to send a message to the Fed. And Zuckerberg over at Meta has already said, managers in our company need to start writing code or they need to leave, which is what Musk did at Twitter. So this brings the AI conversation back into this whole structural unemployment thing where, people just get laid off because the employment market changes. And what does that mean for the Fed? So people are too focused on like, oh, gee, this job or that job might go away. Yeah, okay, maybe. But what does it mean for the Fed? The Fed is done. They can say whatever they want. They are done. They are done with hawkish. That's over.
Interesting. So you mentioned earlier a summer rally, and I'm curious about this because like the conventional wisdom is sell in May, go away. But back in 2019, I think it was, there was a Bitcoin and crypto summer rally. So what are you hinting at there?
Okay, so last year was kind of interesting. Sell in May and go away did work. In other words, I aged a little bit screaming about it in April and was fortunate enough to get viewers out. Okay, now I think it's one of these things where, on May 1st, maybe you get the dip, or maybe the dip is in March. Okay, you get the dip and then you come back. It's almost like you sell. You sell mid-May, you sell the end of school in certain states, or maybe even Memorial Day in the US, and then you come back and say June, July, and then, it's like 2 months of, right? This could happen in stocks, right? You sell in May, you go away, you come back for the summer rally in June or July, and then, come September or October, you exit. In other words, it's just a process of fading everybody, right? There's a recession. It's the end of the world. They're going to get CZ, buy. It goes up, euphoria, sell, right? We're watching small versions of it. And I'm guessing later in the year, we could see bigger versions, like, bigger rallies and then followed by, an event in the fall. So it's almost like, I know this is laughable, but like stock market almanac type seasonal behavior, right? Like we had up in January, right? So the January effect, like whatever happens the first day, week, month of January is what the market does for the rest of the year. So, the other thing about the summer rally is, it could be crypto led or it could be equities led. I mean, money market funds, cash in money market funds is at an all-time high. Like it's twice as much as it was in 2008. More people in America think the stock market is going to go down than ever before, according to sentiment surveys. When you have people this bearish, it almost has to go up. And the way they say it is the market climbs the wall of worry, right? In other words, the more stuff there is to worry about, sometimes the more it can just slowly rally as one person after the other piles in. And in crypto, the regulators are currently building the new wall of worry, right? So my theory is that, they'll do their thing and that'll create some choppiness, but eventually crypto just starts climbing the wall of worry.
Yeah, interesting. So I wanted to ask your opinion on this because you've been around markets for quite a while. It seemed like for quite a while, everybody was pretty certain Bitcoin was going to $10,000. Didn't go to $10,000.
Right.
And then things turned around. Everybody was pretty certain going to 40, 60,000 soon, potentially 220 top, 70 next bottom. So, what do you even give these price predictions any heed, or is it just kind of don't pay attention to them?
Okay, well, I think you can pay attention to them. But again, it's in the context of not following the herd as best you can. Like, somebody asked me, gee, Bill, how do I measure sentiment? Like it's a preset and trading view, like boom. It's not point and click. Okay. So, when it was at 18, everyone says it's going to 10. That was kind of understandable because a lot of those assets from those bankruptcies, if they had been sold in the open market and not gone into bankruptcy court, you could have seen 10, right? Because all the assets from all these insolvent companies are tied up in bankruptcy. Now, can Bitcoin go to 40 or 50? My work shows it can. Okay. So, I don't want to be a moon boy, but if Gary Gensler gives you a month and a half of dips, well, let's take it. Because the fact of the matter is institutions are after the Bitcoin ETF. This is the opposite of 2019. Remember when they introduced futures or Coinbase went public, everything just went. Yeah, they are after the futures contract. That is a fact. Open interest is expanding on the way up. They are after the ETF. Assets under management in the Bitcoin ETF is up only, right? And I even read an article the other day that Michael Saylor's thinking about Ethereum. So whoa. Big players want this stuff. And, when you have legacy investors, they like doing value investing, right? Like a legacy stockbroker will just basically tell you that at the end of the year, you should sell whatever's up 20% and buy whatever's down 20%. Well, in crypto, we all know those percentages are higher. So, can Bitcoin go to 40K? I mean, is it really unreasonable if the move from 70 to 16, if they retrace half of it? I mean, you don't have to be a chart guy to know that nothing goes straight in one direction. So what is, this is like, this term is used in math. I'm kind of using it in my head. What is fair value for Bitcoin? What is fair value for Ethereum? Is it 1,500 or 1,200? My answer is hell no. Okay. Maybe it's not 50K Bitcoin, but it's not 21.
Very interesting. Yeah, I think it's just a matter of time, because each time it seems like each time there's a bull run, there's more people who get exposed to cryptocurrency, and then the next time it goes up higher, they kick themselves even harder that they didn't get into it or they sold the bottom or whatever. And it seems like those cycles. I just saw ARK Invest had something that by 2030 they have a bull case for Bitcoin, $1.5 million per Bitcoin. Bull case. Bear case, 250-some thousand.
Yeah, I mean, there are ways to do the math on Bitcoin to come up with really high price targets. The reason I don't think it's 1 million Bitcoin is because ChatGPT told you the next big thing may have not been invented yet, which is very exciting for crypto, right? If you missed everything when it first came out, you may actually have a chance to get in at the ground floor if you can find it, right? Honestly, like Delphi, I believe, published an analog that shows this bottom looks just like the 2019 bottom, where, it was like $3,000 and it's going to zero. It's going to 1,500. It went up, range traded, and then it went to 14,000. I mean, if you just go back and look at the chart, it was like up range, up way more than people think. I mean, I was working for, a major Bitcoin maximalist at the time, a name you would recognize. And I was like, sir, Bitcoin's going to 13K. And he's like, I can't say that. I can't tell people that.
Mm-hmm.
That's how bad the 2018 bear market drop was. Like you couldn't even say where you thought it was going.
Mm-hmm.
And this is no different. I'm sure by the time Gensler and friends get done with their gymnastics, and I got plenty to say about that, no one will want to talk about 50K Bitcoin, when the fact of the matter is, you could see that because we both know what could happen if Bitcoin actually does get rolling. So I don't want to be a crazy moon boy, but fair value for Bitcoin is above 30. Let's put it that way.
Mm-hmm. Yeah, I believe it. So anything else that you have that you really want to share today?
Sure.
Mm-hmm.
So let's talk about regulators, right? Let's talk about, what regulators do in the wake of a crisis. So 2009 versus today. Okay. Back in 2009, Merrill Lynch, Bear Stearns, these are like investment banks, right? AIG, a huge insurance company, all these places. AIG didn't blow up, but, Lehman, Merrill, Bear Stearns, they did. Okay. So they were the ones who committed the sins. And since they went away, who was there to punish? Well, the people who either didn't do anything wrong or the people who just survived. So, lightning struck, the forest burned down, and regulators took it out on the trees that survived, right? Because they got no one else to take it out on, right? Like if FTX blows up and they miss it, or they were taking campaign contributions from FTX, they have to get all, they got to go after somebody. So, Kraken offers 5% on Ethereum. Okay, let's go after them. Let's go after anybody. And this happened back in 2009. I mean, after 2008, compliance inside investment banks was so tight that I had to have a partner at my company review a technical analysis piece that says, this is support, this is resistance, this is a pivot point for S&P futures, like something that you could read in a BlackBerry. It was that tight, right? Compliance was like, regulators came in and fined people for sport. And God forbid if you actually did something in it. Most of the stuff that banks, I think, did wrong outside of these money laundering scandals, sometimes stuff it would just be banks would just do like, oops, we just made a mistake. Forget about it. Regulators came down on the good people, punishing them for the sins of the bad. And in this case, they're going to make everybody pay for the sins of FTX. And this story has this, the moral of this story is that regulators go out and do this. They create the wall of worry. But back in 2009, it was up only. Yes, that was goosed by the Fed doing QE. But in this case, I think it's goosed by Satoshi's vision and this whole idea that Web 2, there won't be any difference anymore between Web 2 and Web 3. It's all going to be the web, right? Satoshi's vision about money, that's going to carry the day. And then, the day Zuckerberg at Meta debuts an AI-based friend that you can go into Metaverse and hang out with, people are going to go, oh my God. All right. So innovation and sound money will carry the day. And this is so predictable in terms of the behavior of regulators. We've seen this before. And, every time they come out with whatever, like when I saw the Kraken thing, I was like, oh my God, what's old is new again.
Mm-hmm. Very interesting. Yeah, it's a very interesting times we're living in. And, so any tips for people who are just newer or who may not have been around for the last markets, or maybe just getting started now?
Getting into it?
Mm-hmm.
Sure. So start with the basics, right? The way I would describe it to people is everyone says, start with Bitcoin, figure out how it moves. If you put $100 into Bitcoin and it turns into 70 and you're upset, then you need to take a slower approach to onboarding into crypto. Now, the advice that I'm also giving people is ironically, try a little bit of speculation. Like, don't buy stuff up 100%, but, you know, try the altcoin casino. Try Avalanche, try Solana, not investment advice, right? Like, you know, Avalanche has a partnership with Amazon that was talked about for 2 days. There was a minor pump and no one's talked about it since. Try an intelligent speculative play, almost like you would with a tech stock, right? So try sound money, try to look at altcoins like a tech stock, and just try it, right? Because when you're in this transition from, you know, you're going from crypto winter and you're in crypto spring, it's a good time for new people. Because, you know, in spring, it can if you're in the Midwest, or, you know, it can still snow in spring, or you can get like rains, and it can rain and be 40 degrees Fahrenheit. That's good for new people, right? Because you get these dips and you get this opportunity to say, all right, let me practice buying on red. You know, it's really, really tempting when the market's up 25%. It's like when you want to buy green and all the YouTubers are like, the bull market is back. It's so easy to do that. But you can practice the tough trades, right? With small amounts of money, not the rent. So crypto spring gives new people, you know, a chance to get sound money, read a book, you know, and try and look at altcoins like tech stocks.
Great advice. Yeah, and I mean, it does appear like the trend has shifted from a downtrend to an uptrend overall. So, you know, now's a great time to get involved anyways, just because generally the trend is your friend.
Right. The trend is your friend, and bull markets, you know, bear markets don't let you out and bull markets don't let you in. A lot of people are like, oh, the bull market is back. And I wake up and push the green button and I have a Lambo by lunchtime. No. Okay. You know, bull markets scare you to death when they dip, right? 2010 in equities, I mean, they had a flash crash that was like epic, scary. Like, we thought the whole system was broken, right? People in 2010, 2011, when like Portugal, Italy, Greece, and Spain couldn't pay their bills, like that felt like the end of the world. Meanwhile, smart money was just like, oh, Facebook, Apple, Amazon, Netflix, Google, we'll just hoover all that up. Okay. Meanwhile, everybody was focused on what was wrong. So in bull markets, the knife experience, I actually learned this from a really smart guy, he's a little local guy in Austin, Texas. He's like, you know, bull markets give you the knife experience, and it's so scary because you're reminded of the bear market, but bull markets give you those opportunities, right? And you know, managing your emotions is just as important as it was in the bear market. You can learn how to see extreme fear and take advantage of it. And as I always say, you know, we can say the trend has changed. Like, you cannot, I can say it, you can say it, every YouTuber can say it, or nobody can say it. But it's not a bull market until you can buy a dip and make money. So if you can buy a dip, you know, you may not make money in the next 5 seconds. Sometimes you can in crypto if you're a day trader. But if you can buy a dip and make money, and you've proven to yourself that it's a bull market, then you can start following bull market psychology.
Awesome. Well, awesome advice today, Bill. It's been an absolute pleasure to have you on the channel. Anyone who wants to, they can check you out on YouTube at Crypto Noble, Twitter as well, Instagram, and I'll post the links down in the description. But Bill, thank you so much for joining us.
Randall, always a pleasure.
Yeah. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.